What is going on, investors? Hopefully you guys are doing well out there. That is right. It is Friday. It's time for the playoffs to start in the NFL, and it's time for the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major FAANG stocks. This week, we've got Tesla cutting prices. We've got Tim Cook cutting his salary, but we kick things off like we always do with Meta Platforms. Started the week at 131. You're going to love this from a technical perspective. Boosted up another 4.3% to finish the week close to $137 per share, but not a lot of news out of Meta this week. Moving on to Apple, started the week very close to $131. This one melted up just a little bit, up to about $134.75 per share. That was a gain of nearly 3%. That's after CEO Tim Cook asked for a big cut in compensation. I tell you what, he's still raking in the bag. He's going to take in a total target compensation of nearly $49 million, his base salary of about $3 million, and about $6 million in bonuses is something I'd love to have. This was after some backlash from shareholders that felt maybe his compensation was a little steep. Apple App Store in line with UBS expectations ahead of those Q1 results. So we've got Apple reporting their Q1 results, I believe, on February 2nd. And so everybody's going to start lining up and realizing or start making predictions on where these results are going to be. And now it's that all important App Store where you've seen a lot of pushback from maybe a somewhat of a regulatory perspective, but primarily from a legislative perspective, as you have some lawsuits that revolve around that App Store app tax. So we'll see what happens here. Obviously, we'll be waiting to see what happens when they report their earnings just a couple of weeks from now. Key Apple services execs reportedly leaving the company this month. Peter Stern, who is in charge of a lot of the different business units inside the services units, which is like iCloud, books, music, fitness, those types of things, looks like he's leaving the company towards the end of January. Apple may be releasing $99 AirPods and a new AirPod Max headphones as soon as next year. And so we really haven't seen this with Apple too much. Okay, we'll talk about it later with Tesla, but we haven't seen kind of that drop in price. Okay, as you start to see demand maybe wean a little bit for your products, especially at kind of the higher price points, well, you introduce or you drop the price of kind of a lower end model. So we'll see if Apple goes that route with their phones, maybe their MacBook computers and those types of things. As the demand and the economy is a little rough, it's hard to charge $300 for a pair of headphones, but I tell you what, $99 probably could sell quite a few of those. Apple is working on a touchscreen for its Macintosh computers and may introduce them as soon as 2025. Certainly can be something from a software perspective and just a usability. And also with Apple's products, it's something that would just be seamless because you use the touchscreen on the iPad and the phone, and introducing it at least into the laptops, I think would be very, very wise for Apple. Dell, HP, and others sunk as Citi says that the Q4 PC data shows a worse than expected decline. I read another article on kind of a computer analysis type of a website, kind of a buying website, that talked about how computer prices are just getting slashed across the board at the Best Buys and those types of things. So that's another thing that we'll have to see when Apple reports their earnings. How well did their PC market, how well did their PC business hold up over the last quarter, as we're seeing others just see a rapid decline, as many people bought new computers during the pandemic and they really don't see no reason to upgrade at the current time. Apple is looking to wave goodbye to Broadcom and really other makers, other component makers inside their phones by 2025, as they're going to develop their own like modem and Wi-Fi and Bluetooth chip. I saw another report somewhere else where Apple is likely to make their own screens as well. So Apple's going that route to where instead of sourcing a lot of these materials, they are going to use contract manufacturers more than likely, but develop and kind of have these proprietary to their own phone. I think it's a good idea. It tends to be a business that allows you to control your margins and often gives you a little bit wider margins as well. And so it's just the direction Apple is going in. It is also a direction where they can spend their R&D money, because we know this company has a large pile of cash and they're not allowed to go out and buy certain companies from a regulatory perspective, or they'd have a lot of pushback. And so the direction they're going with their spending is just develop these chipsets and all this technology in-house. And I tell you what, when you look at it from a silicon perspective, their M1, M2, their Pro Max chips and stuff that they develop for their phones and their computers, those have been phenomenal. And so I think they obviously could pull this off. Now, Apple reportedly used custom-built displays. This is where I saw this on my own channel here, and preparing for this program is Apple reportedly used their custom-built displays in the devices as soon as next year. So they'll start developing those displays. I think that's a great move for Apple. Moving on to Amazon, start of the week at, this is right, $88 per share. Boom, up 11%. You will see this from a technical perspective, just a massive V-shaped recovery for Amazon. Again, as we're heading into earnings, I believe on February 2nd for Amazon, finished the week up $10 higher and 10% higher to finish the week at $98 per share. Getting this one from Twitter, Amazon can in-house manufacture 300,000 robots per year. Now, a couple of years ago, 7 years ago to be in fact, Amazon had basically a contest to create a kind of a picking robot, and the winner at the time was able to do 30 items per hour. Now, I showed you a couple of weeks back like a prototype or a version of Amazon's new robot that can pick items at 1,000 times per hour. I tell you what, when you have a business that is not profitable, and Amazon's e-commerce business is not profitable, well, the way you turn that into a profitable business is replacing a vast majority of the employees doing rather mundane tasks with robots. I know that's going to tick off a lot of the social justice people that view this program, and they'll surely let me know about it in the comments. But look, this is the investor channel, and I care about profits, and we certainly wish those Amazon employees and those Amazon workers in those warehouses can find another minimum wage job, which I'm sure they can, but we're going to replace those people with robots, and that's where the profits are going to be coming with Amazon. Amazon has the least downside risk among the mega caps, this is according to MKM Partners analyst. Certainly from a technical perspective, this definitely looked like it as well. Amazon and Google really had the big pullbacks and are kind of sitting on beds of support. So certainly from a technical perspective, maybe from a fundamental perspective as well. Amazon gaming executive to become the latest to depart the struggling unit. They went there. A video game industry veteran, John Smedley, is leaving the Amazon game studio office down in San Diego. It's difficult. This is why we saw the M&A over at Microsoft. They're trying to obviously acquire Activision Blizzard. That, it's difficult to start these things from the ground up, even with veteran leadership. Amazon to shut down a couple of their warehouses in the UK. I tell you what, Amazon's probably had a look at their quarterly financials, which they report sometime in February as well, early February, and they probably didn't like what they see, so they're starting to continue those cost cuts. Moving on to Netflix, start of the week at $3.14. This company reports their earnings next week, so that's exciting. This one up 5.8% in anticipation of that. Finished the week very close to $333 per share. Netflix to give live streaming a try as the Screen Actors Guild Award signed a multi-year deal. I saw others live streaming news with Netflix, as I believe Chris Rock should be live streaming a very highly anticipated comedy show on the platform. I think that might be his first since being slapped by Will Smith at an award show in the past. Netflix hires PayPal chief for an accountant of the same role. Essentially, this gentleman that was working at PayPal as the chief accounting officer is going to come over to Netflix and work the same role. Bearish Goldman Sachs boosted their Netflix estimates amid the stark dollar turnaround. And I don't think this is getting enough discussion, especially from the macro heads that have their focus primarily on interest rates and what the Federal Reserve is doing. Actually, when you looked at all of these companies' earnings, what impacted it probably the most, way more than interest rates, because all of these companies have plenty of cash. They have ways to even borrow money at still, even where interest rates are now, historically low interest rates, okay? And it's relatively cheap money still if they need to borrow it. Most of these companies don't. But what impacted these companies actually the most was actually that stronger dollar. And if we bring up a chart of the dollar, which I don't have here, it has gotten weaker and weaker. And if that trend continues, well, all of these companies will be surprising on their earnings to the upside, not necessarily in the upcoming earnings, but definitely in Q2, Q3, and Q4. Moving on to NVIDIA, boom. This one started the week at 153, up 10%. Just like Amazon, to finish the week very close to $169 per share. Taiwan Semiconductor reported their earnings, I believe, on Thursday, and it was a mixed Q4. And inside their commentary, they said, look, we're looking at a soft Q1, we're looking at a soft Q2, but we're looking for the back half of the year, Q3, Q4, to actually be pretty darn good. And that was good enough for investors in TSM, as that stock rocketed nearly 10% as well, and it certainly helped NVIDIA as well. Moving on to Google, started the week at 88. This one hit that technical bottom that we pointed to last week and went up a little bit, up about 3.8% to finish the week at about $92 per share. And YouTube is working on a centralized place for FAST, which is free ad-supported television, or really media. And so what Google's YouTube wants to do is be a little bit like a Roku, essentially, kind of maybe be a platform where the Paramounts and maybe the Disney Pluses and maybe Hulu potentially, or all the other little streaming services. You got Discovery, you've got all these different streaming services. Well, Google wants to layer that on top of their platform and create a little stickiness there. We'll see where that materializes. Google and NVIDIA raises more issues with that Microsoft Activision deal. So now you've got Sony, you've got NVIDIA, although NVIDIA doesn't sound like they're directly opposing the deal, but you also have Google along with maybe some other players in the market, although the other video game makers like a Take-Two Interactive, they're not going to oppose this deal because they certainly want some big rich tech company to buy them out at some point as well. Again, we'll see. We're just going to wait and see and let the regulatory process play out on that one. Google Cloud reportedly shuffles some leadership inside its top U.S. sales executives. This very much relates to a story that we talked about it was a couple of weeks ago. So the cloud unit has really survived on a lot of sales. It's a long sales process. Okay, you've got to get maybe these larger enterprises to sign up for your cloud services. So they would structure the commissions to be rather generous. And I think we're starting to see a pullback on that from all the cloud players, where they're going to pull back on those generous compensations. So you're going to see a little reshuffling from an executive perspective. Alphabet unit Verily is to lay off about 15% of the staff. Again, all of these companies report in the next, we'll call it 2 to 3 weeks. Google is likely reporting their earnings on January 31st. They've all had a chance to take a look at the numbers, maybe the final numbers, maybe some preliminary numbers. And so that is why it's really interesting when you see these kind of moves right before earnings. It gives you a little bit of preview, I think, of what we're going to see. We're not going to see really strong earnings. We're going to see some weakness here. But again, some of you might say, well, I'm going to run out and go short these stocks. Well, think about it, though. A lot of this bad news is priced in a lot. I mean, you bring up kind of the yearly charts of these stocks. It is down huge. And so it's not necessarily what's going to happen this quarter. It's going to be the reaction in Q2, Q3, and Q4. And if you get a weaker dollar and get a Fed to pause at the same time, well, it's going to benefit these companies quite a bit. Bayer and Google Cloud to team up for early drug discovery. This is something that the cloud providers often do with pharmaceutical makers. Moving on to Microsoft, started the week at 227, up about 5%. This one really nice technical move, kind of in the middle of the range. We'll see that here in a second. Finished the week close to $239 per share. Microsoft's in talks for a $10 billion investment into ChatGPT developer OpenAI. Microsoft likely trying to maybe layer this into a lot of its services, but primarily their Bing search engine. Microsoft integrating ChatGPT, a potential game changer, according to Webpush. Obviously, ChatGPT is getting a lot of hype. It's something that I'm very familiar with. It's something that I've tested out. I've tested out other services as well. I remember testing out IBM Watson. This was years ago. These things are cool. These things have a lot of use cases. It is the flavor of the week. There are a lot of use cases, but similar to like 3D printing and a lot of other fads that have swept across Wall Street, I'll wait until the profits are really there to really make a ruling on that one. Amazon Azure checks were stable according to Wedbush Securities, in fact, better than feared. I think we had a story about a week or so ago on Microsoft talking about how, their cloud unit wasn't looking good and people were doing checks and thinking maybe the things aren't that great from a demand perspective and certainly maybe from a profit perspective, but things appear to be stable according to some analysts. Moving on to Tesla, start of the week at 118. This one went up a little bit. Finally, 3.5% gain to finish the week close to 122. Tesla is looking for a sales rebound by not cutting. I mean, they slashed prices here in the United States. Now, some of it had to do with the fact that now you have these $7,500 United States government tax credits, and a lot of Tesla's vehicles from a pricing perspective just simply did not fit into that. So look, they cut the price of the Model Y to 20%. I mean, a 20% price decrease. Now that car is about $53,000. That's before the $7,500 tax credit. So now you're looking at a car in the $40,000 range before tax. I tell you what, I own one of these cars for $40-something thousand. There's not a lot to compete against that. And they did this across the board, really, in the Model 3 as well. The performance models all across the board, you saw a 10 to 20% decline in Tesla prices. You actually see this at other automakers. It doesn't often make headlines. They do it with dealer incentives. They do it with financing and all those types of things. So a lot of people are going to look at this and say, oh, Tesla's in trouble. They're dropping their prices. I think a lot of it had to do with to fit into these United States government tax incentives. But again, automakers do this all the time from an incentives perspective. And look, when demand falls, you've got to cut the price. And that's what Tesla is doing. Now, they fell earlier in the week as their China plant in Shanghai expansion appears to be delayed as they're seeing softening demand out there. But at the same time, they're planning a huge expansion of their Austin Gigafactory as they hired permits for an additional 1.4 million square feet of space out there in their new headquarters. Let's move on to the technical segment of the show. We bring up the S&P 500, and I promise you I did not move this green line. Talked about how I believe, and look, I might be wrong. I might be wrong about a lot of things, but I believe these are the lows. Doesn't mean we won't come close to retesting them, but I think we hit the lows back here in October of 2022. Now, I might regret saying that as we head into earnings season. That is certainly something that could reverse things, but we are now starting, it appears to be, at least in the shorter term, some kind of uptrend. We have met a resistance area. Okay, critical week next week coming for the S&P 500 is we have this black line here representing our downward trend. Every single time we've met this black line for basically a year, we've gotten rejected. So we absolutely expect the S&P 500 to get rejected sometime next week. If you break above that and you put a move above this candle, that would almost guarantee that these were the lows back here in October. So that's really what I'm banking on next week, or really over the next couple of weeks. If we get rejected, it's not a big deal. You would like for the rejection to hold above kind of this 3,800, 3,700 area where you create a new series of higher highs. It doesn't have to be this steep though. So even if you come back anywhere north of the previous lows back here in October, really anything above 3,570 on the S&P 500 would be really setting up relatively nicely. Speaking of relatively nicely is Meta. Once Meta broke above this black line, I went long on this stock. We've talked about how, first of all, in the shorter term, the technical setup has just been spectacular. It was making higher lows, higher highs. It confirmed it also for me once it got above this black line. This black line is a key area, was support for a while, and then it came into resistance. And so once it did that, I put on a very shorter term thing. I peeled off a little bit, complicating the situation if we have Meta earnings in a couple of weeks. We, just like the S&P 500, we have this kind of thicker green line here. We've essentially kind of met our matchup here. And so Meta is going to go one way or another. It's either going to break above here. And I tell you what, if it breaks above here, it's got a very strong shot of getting back up to the previous area of support up here at about 160. I mean, we've got another $20, $25 to run on Meta if this momentum stays. If it doesn't, it's really not that alarming. Okay, you should have some support down here at 120. This trend is still intact as well. Any kind of support back here at 120. Again, complicating the situation is you have earnings, and every time Meta has reported earnings, it hasn't gone well for the company. So we'll see if they can balance that. Moving on to Apple. This one bounced off a technical level we've had marked out here on the purple line. Didn't quite get there to the dollar. This is why I tend to, if I want to buy a stock, I tend to kind of jump the gun a little bit. I mean, I guess you can be a little bit more disciplined than I am. Now, the bad news for Apple is it's running up into earnings, which are largely seen as probably not being very good. But again, you have a lot of that probably priced into the stock already. But you also meeting two areas of resistance. You have an area of resistance kind of converging here at 137. So just $3 higher with Apple. I am not convinced this stock can kind of bust out through that without reporting earnings. So it could be that we're in a holding pattern with Apple. It holds this level until, basically for 2 weeks until it reports earnings, or it just, the buyers and the sellers kind of give up and this one kind of retraces back to 123. This one looks like to me any kind of bad report and we're coming to this green line, kind of the load up point, I think, with Apple, back down to 115. A break above this level wouldn't necessarily be mega bullish, but it probably would confirm that the S&P 500 breaks above its upper trend line. Now, speaking of breaking, I tell you what, Amazon hit the bottom of our green box that we've had on here on the channel. I think I've said this at least 30 times here on the channel, is our buy zone has been between 82 and up to about 103. And when it hit 82, that was a wonderful time to buy, at least in the shorter term, as it's rallied very hard over 10% this week alone. Now, just like the S&P 500, just like Apple, just like Meta, it has started to meet its match from a technical perspective. We got this thick black line. It could be drawn in a number of different ways. So even if Amazon kind of breaks out over this, because of the severity of this drop, it's not as clear of a technical breakout. But what you'd like to see with Amazon, just like you'd see with Meta and Apple and really the S&P 500, is we need further continuation to the upside. Not exactly expecting this next week. Again, we're heading into earnings, so I'm not necessarily expecting this into next week. But if earnings are good enough or the guidance is good enough, well, I tell you what, that is something that can materialize here pretty quickly. Moving on to Netflix. This one is setting up at the top of the zone, just like we've talked about many months here on the channel. It created this wide gap. I talked about once Netflix filled this gap. I don't know why I confuse Netflix and Amazon all the time, but excuse me if I do that. Netflix, once it got over 245, it was going to close this gap, and that's what it did. It went from 245 up here to 332. I wish I could sit here and say I profited wildly off that. I profited maybe a little bit, but not as much as I should have, considering I telegraphed this pretty well. But look, now you're at a two levels of resistance. All these stocks are setting up at resistance. It's really cool how the technicals really kind of come together, especially around a fundamental event. Okay, all the technicals are converging at a top of a range right when these companies report, and so that can create very volatile action when they report. Any kind of decent news or good enough news, and you can have a violent move of momentum to the upside, or you could pull back. And in Netflix case, don't be concerned if it pulls back. It could pull back to 290. I wouldn't be concerned. A pull back to 250. I wouldn't be concerned. I mean, we could go from 330 to 250. I really wouldn't be concerned. Even a pullback all the way back into the 230s, it would really kind of keep you in this uptrend. It's not like I would snap buy this stock at this level. I just really wouldn't be overly concerned. Now, speaking of not being overly concerned, take a look at NVIDIA. This thing found some support where there's a little bit of support for the stock right here. It bounced here, a little bit of bounce here. It was resistance back here. So I guess we can kind of slip in a new line here with NVIDIA. It found support this week at about 144 and did a nice little bounce. Okay, it's still at what I would consider kind of a top of the range from a valuation and even a technical perspective. You're still obviously have a very steep downtrend, which we've broken out of, which is good news. It could absolutely mean the lows are in NVIDIA at about 113, 110. Still could retest them, still could come back, kind of mosey our way sideways, retest them. A bullish move is you want to get back up to 195 and really break over that. NVIDIA doesn't report their earnings until the middle of next month, so it could be some time before that. Now, moving on to Google, we talked about how last week, this one's obviously been setting up in this channel like pretty much much all of these stocks. It was at the bottom of the channel. I think we did our show last week. It was at the bottom of the channel, and it's kind of making its way up there. Google reports their earnings towards the end of this month. Still got a ways to go. If the momentum stays in these markets, if they hover, if they kind of, we don't have big volatility, and, look, I could see Meta hovering, Apple kind of just staying put, Amazon, these have had monster move, Netflix as well, even NVIDIA. Well, Google probably is the one that has the most to run over the next couple of weeks heading into earnings, as it could move another $8 before you got to the top of the technical pattern like the rest of these ones. Moving on to Microsoft, this one found support. So the reason why we've had this gold line in here kind of dissecting our channel is occasionally what Microsoft has done, more often than not, it actually has gotten rejected at this gold line. You see here on the price action, it gets rejected. So it hits the bottom channel, comes back up to the middle channel, and then comes back and does a back test. It actually hasn't gotten over that channel very often, but more recently it did get over that channel, and it back test to the gold line, and a very, very strong sign of strength, actually bounced right off of that. Now we're setting up, again, like all of these stocks, at the top of a channel. We should have earnings in about less than 2 weeks from Microsoft, so we'll see if it able is to hold this level until earnings, or we'll get some movements before that. I tell you what, I would not be comfortable placing a bet one side or the other on these stocks. In the shorter term, those of you that trade the shorter term, I would probably just go on the sidelines and take a vacation for the next 2 weeks. That would just be how I would want to do it. Now, moving on to Tesla, stronger volume. Okay, it's hard to see probably on the screen, but you've got strong volume on a decline, but we had a little bit of sign of hope here with Tesla as it's kind of bounced off the lows. It found some support down there at 100. Now, we're still in just the steepest of steep type of decline, both from a bottom and a top channel perspective. We've got resistance up here at 140. Now, the company does report their earnings in about 2 weeks or so, and so we're certainly in a holding pattern really until then. And so what we're looking for with Tesla, and really a lot of these stocks, is can they keep the shorter term momentum heading into earnings? Can Tesla rally up into 140? Setting up at the top, similar to Google, Tesla's got a little bit more longer to go to set up at the top, whereas most of these stocks, the other ones that we're looking at, are actually already there. That's what I'm not saying like pack up and go home and wait till earnings, because I tell you what, if next week you've got strong momentum to the upside, if the following week you've got momentum to the upside, well, now you're talking about breakout type momentum trades. Netflix has got a gap up here between 450 and 500. I'm not saying this is where it could go, but I tell you what, you get momentum in these markets and they can be as irrational on the way down as they are on the way up. We are going to be monitoring these things very, very closely. The S&P 500 in particular, you get a break to the upside on this one, would reverse a lot of short positions, which are probably starting to materialize at this level. Keep a close eye on things. We'll certainly be here to cover it here on the channel. We'll get to as many earnings as we possibly can over the next couple of weeks and mix in a little bit of football as well. Hopefully you guys have a wonderful weekend. We'll see you again next Friday. Enjoy your Monday off as we appreciate Martin Luther King and all his contributions to society. Hopefully you guys have a great weekend and 3-day weekend. Good luck with your investments.